Behind the glittering skylines of Asia's financial capitals lies a hidden story. A story of dynasties, crises, and power struggles that shape the destiny of nations. From the bustling streets of Shanghai to the trading floors of Tokyo, banks have not only moved money, they have moved history. But how did Asia's banks rise from merchant houses and colonial institutions to become global giants? And what secrets lie in their hidden past? This is the untold history of Asian banks. To understand their power today, we must first travel back to their origins. Centuries ago, when banking was not skyscrapers and stock markets, but families, merchants, and empire. In ancient China, money lenders weren't sitting in glass towers. They were merchants, families, and even temples. By the Tang Dynasty, paper money was already circulating centuries before euro caught on. Imagine that, a farmer in the 9th century paying with a slip of paper instead of coins. Meanwhile, in Japan, powerful merchant families, the Zaibatsu, were building financial empires. These weren't just banks, they controlled industries, shipping, and even politics. Banking was family power, not just finance. And in India, banking took on a different shape. Colonial powers like the British set up institutions to serve trade and empire. The Bank of Bengal, founded in 1806, wasn't built for ordinary Indians. It was built to move money for colonial rulers. So, from dynasties to colonial empires, Asia's banks were never just about money. They were about control, who had it and who didn't. By the mid 1990s, Asia was booming. Stock markets were soaring, skyscrapers were rising, and the world was calling it the Asian miracle. But then, almost overnight, everything collapsed. It started in Thailand. The Thai baht was under pressure, and when the government finally let it flow, the currency crashed. Investors panicked, money fled the region. Within weeks, the crisis spread Indonesia, South Korea, and Malaysia. Banks failed, currency lost half their value, and millions of people were thrown into poverty. The IMF stepped in with rescue packages, but those came with strings attached, painful austerity, and foreign influence over domestic economies. For ordinary people, it wasn't just numbers on a chart, it was lost jobs, shattered businesses, and a deep sense of betrayal. The Asian miracle had turned into the Asian meltdown. But here's the thing, the crisis didn't just destroy, it reshaped. Government tightened regulations, banks became more cautious, and Asia learned hard lessons about globalization. And those lessons would prove critical, because just a decade later, the world would face another financial storm, the global financial crisis of 2008. The 1997 crisis left scars, but it also left lessons, and Asia wasn't about to make the same mistake twice. Government tightened regulations, banks became more cautious, and economies slowly rebuilt. By the early 2000s, Asia was back on its feet, stronger, leaner, and more prepared. Then came 2008, Wall Street collapsed, Lehman Brothers fell, and the world braced for impact. But here's the twist, Asia didn't crumble. In fact, many Asian banks weathered the storm better than their Western counterparts. Why? Because they had already learned the hard way in 1997. And then a new wave hit, not a crisis, but a transformation. Mobile banking, fintech, startups, and digital wallets exploded across Asia. In China, apps like Alipay and WeChat Pay turned smartphones into banks. In the Philippines, GCash became a lifeline for millions. In Singapore, digital banks challenged traditional giants. Banking was no longer just about vaults, and branches, it was about apps, QR codes, and instant transfers. Asia's banks had gone from fragile to resilient, from traditional to digital, and this transformation wasn't just survival, it was reinvention. But behind this resilience lies something deeper: power, families, governments, and hidden networks that still shape the future of Asian banking. When we think of banks, we picture vaults, skyscrapers, and apps. But behind the scenes, banking in Asia has always been about something deeper: power. In Japan, the old Zaibatsu families may have faded, but their influence lives in the modern corporations. In China, state owned banks are not just financial institutions, they're instruments of government policy. And across Southeast Asia, powerful families still sit at the crossroads of finance and politics. Banks decide who gets credit, who grows, who falls. And in Asia, governments often use banks as tools of national strategy, funding infrastructure, guiding industries, and sometimes keeping rivals in check. But the next chapter may not be written in the marble bank halls, it's being written in code. Digital wallets, blockchain, and AI driven finance are reshaping how billions of people interact with money. The question is, will this new wave democratize banking or simply hand more power to those who already have it? The hidden history of Asian banks is a story of dynasties, crisis, resilience, and reinvention, and it's still being written. Every time someone scans a QR code, takes out a loan, or trusts app with their savings. The vault may be digital now, but the power inside is as real as ever.